The past 2 months at Commonwealth has been a blur. We have made some significant changes, and we are going to take a moment to explain a little more of what has happened. We're also going to spend some time talking about our new custodian, their role, and how they help us help you. Lastly, we're going to talk about some improvements and enhancements to our service model to help you plan for your future. Mike Cease and Todd Kemple join me right after this. Welcome back. I'm Neil Watson. I'm a certified financial planner here in Marietta, Ohio. It's been a few weeks since we've released a Wealth Wednesday episode, and we're glad to be back on track with that. And today I am joined by two of our founding partners, Todd Kemple, a chartered financial consultant in Wheeling, West Virginia, and Mike Cease, a certified financial planner pro in Parkersburg, West Virginia. These two founded our company a couple of years ago. Guys, welcome back. And it's been more than a couple of years. It's 20 now. This is our 20th anniversary as a firm. Todd, we're going to start with you. For many people in our industry, it's kind of cloudy and somewhat of a mystery. There are different types of firms who serve different roles, and sometimes those lines are very blurry. Can you give us a rundown?
Sure. Yeah, 20 years, Neil. You shortened it to 2. It feels like 40. But anyway. Yeah, let's walk through this. There are four major types of companies who operate in this industry, this world of personal finance. We have banks, we have insurance companies, we have broker-dealers, and then registered investment advisory firms. And most of those operate in some form in several different spaces. So, for instance, it's not uncommon for your local bank to have an investment department, maybe an insurance operation, and financial advisors as well on staff. Insurance companies entered into investment and advisory landscape several years ago, and broker-dealers operate in the banking sectors and advisory services, and many reps also sell insurance. So you start to understand pretty quickly how the consumer can get confused, Neil.
It is a complex world, but let's break this down a little more so people can understand. And let's start with the broker-dealer world.
Sure. Most people know a brokerage firm when they hear their names. What we used to call the wirehouse world includes some of the oldest and biggest names in our industry. Their messaging makes the parent firm the primary point of focus to their consumers. Then there is the independent broker-dealer firms. That's who we were affiliated with until about 2 months ago. Those firms allow their reps to establish their own separate identity. The key thing to remember about brokerage firms is that transactional-based business is a pretty common portion of their operations, meaning that the advisors, quote, brokers, and that's another difference in terminology that you're going to see issues about in coming years, can receive commissions for the buying and selling of investments. Though their financial incentives are based on whether or not they could execute transactions to sell you a product. Does that help, Neil?
Absolutely. Very, very good explanation. Mike, you and Todd got your starts in the insurance industry. How does that differ, or does it differ from the broker-dealer world?
It does differ. The insurance world is about selling products issued by those insurance companies. It is a transactional-based world. And what I mean by that, agents typically receive commissions for the products they sell, whether they're selling an annuity or a life insurance policy. And where the insurance industry even gets a little bit more complex is they also offer products called variable insurance policies, where you have some form of permanent coverage that allows you to allocate your cash value to investment sub-accounts. Those are really designed for those willing to add additional stock market risk to their life insurance. But again, one of the big differences, it comes down to compensation structure. The insurance industry is a transactional world, and to keep the money coming in, the agents must keep selling insurance products. The one real big difference is that on the fixed insurance product side, those are not considered investments, and those are not regulated by the Securities Exchange Commission.
20 years ago, you, Todd, and the other founding partner of Commonwealth left the insurance world and joined the independent broker-dealer world. And now 20 years later, you've left the broker-dealer world. How does this next evolution impact us and our clients?
Well, the biggest thing for us, it's going to simplify things. It's going to give us a lot more flexibility and control over how we help our clients going forward. We now get to make all the decisions for our firm locally versus decisions being made and changed sometimes regularly at a back office or a broker-dealer's home office. We don't have to respond to a broker-dealer who wants to have a different opinion about how we should do things. We just need to follow the rules of the Securities Exchange Commission and do what's best for our clients. We also have the flexibility to expand what we do more easily going forward now. And so that's for us, for our clients. The change to an RIA really moves us away from that transactional type of business completely. For example, transactional business hasn't been the focus for our firm for many years. It also eliminates those conflicts of interest that come from a sales mentality. We aren't trying to force a product into a relationship. It also allows us to focus on planning and doing what is right for the client, not the broker-dealer. And also, it brings the fiduciary topic back into focus for our clients.
Todd, let's switch gears for a moment. For most of our clients, there is a new name in the mix, and that is Charles Schwab. That is our new primary custodian. For some of our clients, they were used to seeing Fidelity. For others, it was TD Ameritrade. And Schwab had purchased TD Ameritrade, so that move was going to happen anyway. Todd, explain to our viewers, what role does that custodian serve? And more importantly, why the partners at Commonwealth opted to use Charles Schwab?
Absolutely, Neil. The custodian serves several roles, but let's go over some of the more important roles. First, they hold the assets that are actually held inside the client account. They're doing all of the record keeping of those investments, assets, or positions. Secondly, they act as the broker and dealer in essence and execute all of the trades. So when we buy or sell something in your account on your behalf, that is being routed through the Schwab facility. Why is that important? Holding the assets and record keeping is critical. This protects you, the client. We as a firm don't have legal or physical possession of your assets. It avoids the Bernie Madoff type scheme, and the statements are being generated by the custodian, not by our firm. And so it's a major form of protection for you, the client. Why did we choose Schwab? In 2019, there were two custodians who made the custody business for independent firms like us their primary focus. As Neil just mentioned earlier, Schwab bought TD and created the largest custodian. I believe their combined assets under management exceed $7 trillion now, Neil. So Schwab is the leading firm for the type of business that we are, leading in terms of technology, scale, and integration, meaning their systems will talk to our systems. And that adds another level of improvement for us and the comments that Mike was making earlier. Their investment is a dedication to firms like ours and will make us better over the long run. I'm really excited to see that change because it allows our interests to be fully aligned with the custodian's interest. Before we had that third wheel, the broker-dealer, that would, in essence, restrict what we had access to. And so we were trying to serve, in essence, another master, and that's been eliminated. And I can't overemphasize how important that's going to be, Neil.
Yes. Mike, change is never easy, but this one is one that we all felt had to happen as we look forward to where our firm is heading. What exciting things do you see for us and, more importantly, for our clients as we move forward?
Well, first of all, for us, we're almost through this transition. It's been extremely busy. I'd like to say months, but it feels like it's been going on since last June. But over the last several months, we've been working, very diligently behind the scenes to incorporate new technology, software platforms that will allow us to become a lot more efficient internally, which in turn will allow us to focus more of our efforts and time to helping our clients. So that's one of the biggest changes. Also, by becoming a registered investment advisory firm, we believe it'll help us attract the next generation of financial advisors that our clients get to work with going forward. It just makes us a lot more attractive place to work. We'll also be able to stay at the forefront of technology versus being limited by what our broker-dealer offers. We have the flexibility to go out, and if technology changes, we can easily migrate to that new technology. From a client's point of view, which is what this really comes down to, there will be a lot more robust way to keep track of their investments or their progress of their plans going forward with the technology. And also, we're able to help clients in new ways that we haven't been able to, or to a further extent of what we've been able to do in the past. So we'll have additional cash management solutions, additional planning options. We'll also have additional investment flexibility and additional investment platforms that we've not been able to because we were limited in the past with our broker-dealers. The other biggest thing, it's going to simplify things a lot. You're not going to be receiving information from multiple companies. It's going to be coming from Commonwealth Financial Services and the Custodian. So there's not as many moving parts going forward, which a lot of people didn't recognize that, but there's a lot of people who did. It just simplifies the whole process. It makes the relationship between the advisor and the client a lot more personal. And so it's exciting. It's been a tough road the last year, not only with the market, but with what we've been going here. But the future, it's very exciting going forward.
Yeah, and I want our clients to understand this was not something that was done on a whim. The talk of this was happening even before I joined 2 years ago. I think that everyone at our firm kind of understood that this is where this was headed, but there's a lot that goes on behind the scenes that nobody really evaluates. And these two gentlemen have done a fantastic job, along with their other partner, Daniel, in reviewing everything and every aspect of this. And they've spent countless hours trying to get this done in a way that is both efficient and effective as our team moves forward into the next iteration of Commonwealth Financial Services. Definitely the next 20 years looks much more exciting to me, and I hope to the partners as well. I'd like to say,
Neil,
yeah, please.
If I can jump in before you close there. We mentioned Schwab, but we still have a relationship with Fidelity as well. And they are the second largest custodial firm. So there are some situations where Fidelity is more in line with some client circumstances than maybe the Schwab platform. So we have partnered with the two largest custodian firms in the industry, and it gives us a tremendous amount of flexibility in addition to the other items that have been mentioned. So I did want to throw that in at the end.
Yeah, that's great, excellent point. So guys, on behalf of Mike, Todd, and the rest of the team, thank you all for your cooperation and understanding as we've gone through this change. It hasn't necessarily been easy, and there have been a little bit of disruption to everything, and we're very grateful for the patience that you've shown. Thanks for joining us today. And if you would like to learn more about how we can help you, please visit cfswv.com. And we're going to be back on track with Wealth Wednesday going forward. So please join us again next week. Thanks for watching. Enjoy the rest of your week.